Hello, everyone. My name is always Asmal. Welcome to another episode of Two Ways to Skin a Cat, a show where we talk career experiences, entrepreneurship, and investments. The main aim is to show that there's more than one way to be successful other than just climbing the corporate ladder. We are live on LinkedIn and YouTube, and the show will be available on the podcast by tomorrow morning. If you are watching live, drop a 1 in the comments so that we know we're not talking to ourselves, and drop a 2 in the comments if you're watching the recording. So I've got an interesting guest for you this week. For the first time, we're talking to someone from the investment industry on this podcast. So my guest for this week is Yusuf Mowlana, is CASA chartered CFA and portfolio manager at Prudential Investment Managers. Yusuf, thanks so much for joining us today.
Thanks, Tooways. It's lovely to be here, and yeah, look forward to chatting. Thanks very much.
So let's jump into questions. Tell us a little bit about your backstory. Where do you come from? And maybe outside of work, who is Yusuf Mowlana? Give us that backstory.
So I mean, I did grow up in Cape Town. I schooled here and went to university here. I think, like many Cape Townians, you somewhat grow attached to the place. And I nearly took a role in Johannesburg after completing my articles. But then, I was fortunate to land a role in the investment industry with another asset manager, which was my previous role. I landed a role as an analyst there, and then that was my previous role before moving to Prudential. So kind of joined the industry about 8 years ago. Spent about 5.5 years at one of our competitors, and now I'm at Prudential. So yeah, I think outside of work, between work and my family, I have my work cut out for me. So, I tend to, spend my time between those two things and fitting a bit of reading and exercise in between. That's kind of it in a nutshell. So I studied, sort of went the conventional route, did a Bachelor of Business Science, the GDA. I think, that's the fairly conventional route that people follow to if they're looking to get into the investment industry. I think in South Africa in particular, people appreciate CAs because the investment style tends to be bottom up, where you're analyzing financial statements, understanding the nitty-gritty of companies. And so, that I thought, I chose the career because, or the profession, because I saw it as quite a good base to get into anything else that I was interested in.
Okay, I mean, that gives us a good starting point. I know it's been a few years now, but talk to us about that transition from working as a trainee in an audit firm to working in an investment environment as an analyst. And the reason I ask that question is because there's probably I'm sure there's a lot of trainees out there who are considering, should I be moving into the investment industry? What is that transition like?
So I think, articles, for me, it felt like something of an extension of university, in that you're working in a team with people your age. Even your managers are not that much older than you, and it's very much a learning environment where, it is quite a sheltered and protected environment in that you're not expected to know everything, and so from that point of view, it was almost a nice extension of university. But I think once you leave, that nice environment of articles, you do go into a bigger world where, performance pressures are on you, and you are expected to hit the ground running. There won't necessarily be, someone to hold your hand. But I think that does favor, individuals who do sort of grab the bull by the horns and are able to take initiative. And I think in anything you do, whether it's investments or any other role, that ability to take initiative, to learn and teach yourself in some cases, I think that's quite valuable, because I think, a lot of what you use on the job today is not necessarily what you've learned at university, but that ability to pick up things, to learn from other people and your colleagues, especially your more experienced colleagues, is quite a valuable skill that I think you need to cultivate, as soon as you can.
Okay, no, I mean, and I suppose, even my experience is, even as a manager or as a supervisor, you think if you're managing CAs, you're like, I'm good at managing people. And then you move into the big world and you're like, no, you're not necessarily good at managing people. You're just good at managing CAs. You need to learn how to manage everybody else once you leave articles. So that's also something for the youngsters to learn.
Yeah, and that's a nice thing about the current profession that I'm in, is that we, we don't only hire CAs, we hire people with varying qualifications. Some have done a finance degree, others have done engineering, others have done actuarial science, and so one gets to work with people of different backgrounds and different educational backgrounds. I think that does enrich your experience, and it does create the necessary diversity of debate and diversity of opinion that you need, as any organization to succeed.
Okay, no, I mean that's a good assessment. And before you joined Prudential, you spent 5 years working as an equity analyst at Allen Gray. And for those again who are thinking of applying there, talk to us a little bit about the culture. Is it true that it's a requirement that you need to have good marks? Let us know a little bit about that experience.
Sure. So I think in general, investment firms do look for people who've applied themselves, consistently over time. So they do look for. I mean, you almost certainly do some kind of aptitude test, but they do look for evidence of achievement from even from your matric year onwards, and consistency of achievement. So it doesn't help if you have done very well, then do very poorly, without some explanation. Of course, life happens, and there may be speed bumps in between, and of course people will understand that. But I think you're absolutely right. They do, especially in the investment role, do tend to look at those people who've achieved and applied themselves. But that's not to say that you won't be successful having not achieved good marks, because ultimately I think you need a minimum level of let's say IQ, whatever you want to call it, to succeed. Because if you look at I've come across very, very intelligent people who just somehow they don't quite get the investment industry, and that's no fault of their own. But I think I've seen people with different marks, and with people who haven't achieved that well at university, who do exceptionally well in the investment industry. So I wouldn't be put off at all if you didn't achieve very well. If you have a passion for the business, I think that's really ultimately what will determine your success in the long term.
I mean, that's so true. I know quite a few people who are very book smart, but they don't want to deal with people, and they don't necessarily have the skills to work in the working environment in Excel. So that's very true. I remind you, if anybody's got any questions for Yusuf, please add it to the chat now, and we'll ask all the questions towards the end. But just so that we don't miss it, please add your questions now. I'm gonna switch gears a little bit and talk about your CFA qualification. So there's a lot of people who in finance, maybe audit background or even financial management, maybe studying towards a CA or something similar. Would you recommend that that the current CAs or people studying to also pursue a CFA qualification? But maybe talk to us about the differences between the qualifications and where you think they're complementary.
Right. So I think, I mean, the CA qualification, I think those listening would be very familiar with it. It prepares you for a career in accounting, auditing, business, general business, and I think financial management. Whereas the CFA, the Chartered Financial Analyst qualification, it is strictly aimed at investment, people who want to pursue a role in investment. So I think if that's your aim, I would highly recommend it. But if that wasn't your aim, I would say probably best to steer away and use those hours more wisely in something that you actually want to do. Because I think the recommendation of study time per exam, there are 3 exams, is about 300 hours. So it's quite a big time commitment for something that if you're not really interested in entering the profession, I wouldn't necessarily go and commit that time. But is it worth it? I think absolutely, because firstly, it's international qualification. So whether you work in the US, the UK, anywhere in Asia, this is an investment standard. So anyone who has the letter CFA, I think an employee would know, the rigor and involved in achieving that kind of qualification. And ultimately you can pursue opportunities overseas, even if maybe people don't necessarily recognize your CA qualification or your university degree, they'll know that the CFA is an international standard. So I think that was the attraction for me. And also most employers, as a minimum would want you, before hiring you, would want to see that you might have done CFA 1 or even level 2 by the time you start. I didn't do that. So when I joined Allan Gray, I only did CFA 1 in my first year. And I suppose I was fortunate that they took me on despite not having done CFA level 1. But in terms of the curriculum, your CFA levels 1 and 2 mostly cover what you've done in university. And then, there are some new concepts which are introduced, and especially the thing which wasn't covered when I was at university was the ethics topic. And that's really the key subject in CFA. It's ethics, because if you fail the ethics section, often that you would almost certainly not pass the exam. So that's, I think, as you can see from all the various issues of corruption in corporate South Africa, ethics is paramount, and they do emphasize that quite significantly.
So my takeaway is, if you're interested in any part of the investment industry, whether it's listed equities or even if it's just venture capital and private equity, CFA is a good qualification. But if you're not interested in the investment industry, don't waste your time.
Absolutely.
Okay. All right. Then your profile says you were once a board member of the Abasa Western Cape board. Are you still involved? And do you think that the industry has made progress in leveling the playing field since you started working?
So I think I'm unfortunately no longer involved, but since my university career, I had that desire to do a bit more than my studies and play some role in the development of others. And so I saw Abasa when I started articles as a way to achieve that. And I was on the bursaries portfolio. So we as Abasa, we raised money from various events, in particular the CA sort of graduation event, where people of passport to attend a dinner, and profits from that were allocated towards various activities. One of them was a bursary fund, and so I was in charge of the bursary portfolio, and we allocated that money to deserving students at university, and I thought that was quite rewarding in terms of being able to ensure that other CAs are also able to make it through. And I mean, I think that there is certainly progress. I don't have the numbers at hand, but I think if you look at the numbers of black CAs coming through the ranks, there's certainly progress. If you look at the proportion of black students, as a whole, I think there is progress. So I think all those things are encouraging. I think it's common knowledge that at the top levels of corporate South Africa, that is less representative of the country. But I think in time, given that we are able to get good people through getting qualifications, hopefully that too will reflect the demographics of South Africa.
Okay, that's a good summary. What's thinking of? I mean, you worked for different companies. What's one piece of advice you would give your younger self?
Yeah, so I think to read a lot. Although I always took reading quite, I tried to make a point of it, but I think it's the one thing that allows you to, the amount of information out there is almost freely available, and you can almost, without having to attend a course, you can teach yourself almost anything these days. And I think that was key, and still remains key, because it's still something I enjoy doing, is reading widely. Not being too. I think it's important to focus on what you're doing and try to be successful at it, but also don't do that at the expense of reading widely and broadly and sort of educating yourself about a broader range of topics, because I think that it does add depth to you as a person, but also as an employee. I think that's increasingly our roles won't be singular, and the ability to problem solve and to think of things differently compared to other people. I think that's quite an important skill. And reading does allow you, that ability to learn things which you wouldn't ordinarily do. So I think whether young or old, it's probably a good thing to cultivate.
I fully agree with that. I mean, basically, keep learning is the message. Even it doesn't matter what stage of life you're at. There's not going to be a stage where you stop learning. The only way to develop is to keep learning. So if you leave with nothing else, leave with that. Let's just go see if we have any questions. I'm going to go through see if there's anything coming through from the audience. We've got a question from Glenn. How easy is it to switch to a financial analyst type of role if you always had only a general audit financial manager type roles?
I think, Glenn, thanks for the questions. I think it ultimately depends on the individual. There's nothing which says that investment firms will only hire a newly qualified CA. So if you've been in audit, for amount of time, but you do have that passion for investments and you'd like to make the move, I think I'd encourage you to do that. I think one thing that might be off-putting when you just sort of join is that your colleagues will have much more knowledge than you, but I think it's important not to let that put you off. It's important then to sort of just accept it and know that you will never know as much as your colleagues in that little short time that you've been in the industry, but teach yourself, and don't be afraid of applying, because I think if you don't apply, you'll never know. But I think if you can demonstrate the passion and you have the necessary qualifications, absolutely, I think it's not too late.
I mean, you must have an interest. If you're passionate about it, you must have an interest in the industry. You must have an interest in investments. If you don't have an interest in investments, then it's not likely to be a success. Understanding what you like and what you don't like is very important. We've got another question from Lerato. How are you able to balance completing your CFA level 1 and 2 with working in an investment firm straight out of articles?
I guess it does require an element of sacrifice, an element of discipline. So I studied from kind of 9 o'clock in the evening to 11 o'clock at night, in the week, and then allocated maybe a Sunday afternoon to doing a bit more work, and sort of, I think it's important to set goals in terms of the CFA does have particular sections and learning outcomes, and set goals, strict goals in terms of how much you need to get through by a certain amount of time, so that you can eat the elephant one piece at a time, if I can use that analogy, rather than start early, so that you have time to plan, and you have a bit of if work gets busy, you can sort of make a plan around busy times so that you can always catch up. But I think it's entirely possible, and the CFA is designed to, actually, it's aimed at people who are working full time and studying part time. It's designed around that. And if you work out what 300 hours is over a period of 5 months, that's sort of 60 hours a month. I think it can be done with with a bit of work on the weekends, if you can. I think ultimately, you just need to know that if you're motivated, you'll be able to do it.
So have a plan, stick to it, and maybe, I guess, if the younger you are, the better. Probably before you have too many commitments where you have to sort people out as you come through. It looks like one more question coming through from
But always just sure. On that point, I wouldn't be put off by having other commitments. So I think when I came back from my daughter was born in the month that I did CFA 1, and then my second child was on the way when I was studying for level 3, and so that was a strong incentive for me to study really hard for level 3, because I knew once the number 2 comes along, it's going to be quite difficult. So I don't think try not to be let your circumstances dictate what you want to achieve. I think you can work around those.
How badly do you want it, basically?
That's right.
We've got a question from Mano. What's your take on the crypto wave? Are South African investment firms embracing them?
Mano, it's a very interesting question. I think I'll answer the second part first. So, are South African investment firms embracing them? I think, not yet. I think these things are quite difficult to determine an intrinsic value for, and one can't help but think that there is an element of hypes, and I'd encourage you to maybe just watch the Berkshire Hathaway recent AGM. Charlie Munger and made some comments on Bitcoin. I think you should take them from where it comes. He obviously is not a believer. I think the technology is very interesting in that it has some interesting applications. I'm personally just not sure that given that the market cap of some of those those cryptocurrencies that they are actually valued, given that they don't produce any cash flows. I think one can make similar arguments for gold, but I think I somewhat sit on the sidelines and think about try and scratch my head as to what the values that are placed on some of these things, and I think they are somewhat speculative, but I think people like me have been saying that for a long time and have been wrong. So I would say in that respect it's best to do your own research, but I personally don't own any.
We've got a question from Sali Jamuddin. What advice do you have for someone working as a fund analyst trying to transition to an equity analyst?
So, I think as a fund analyst, if I understand the role correctly, you're analyzing, individual funds, maybe for recommendation to clients or to rate them. So I think that gives you good access to, what different fund managers hold in the portfolios. I think a good start would be to try and understand what the investment cases are for each of the investments in the portfolio. Try and do your own research to see where you might differ. And I think that process will allow you to start thinking about investments independently. And I think the ability to sort of think about investments independently will stand you in good stead, when you come to the interview, because I think most of the firms will expect you to know something about investments. If you say I'm passionate about investments, they'll ask you, okay, what are your top 3 picks? Or if you look at our fund, which are the stocks that you like or don't like, and why? So I think if you can have answers to those, and genuinely, you're able to think about the problem on your own and analyze a company and analyze what you think it's worth. That skill set, will allow you to make that transition.
And just as a follow-on, I've sat in those interviews where they ask you those questions, especially at investment firms. You don't have to get the answer right. They just want to see that you can apply your mind, and they want to see how your thought process works. So don't be afraid to apply your mind and think about those things, because it can be very intimidating when you're in that interview.
It can be, but at the same time, you have nothing to lose, everything to gain. So do your research and take the chance, apply, and I think prepare well. But ultimately, you are no unless you take that opportunity. So do try.
We've got one more question from Lerato. I think we'll cap it from questions from that point of view. But suggested reading for someone trying to break into the investment space.
So Lerato, thanks for the question. I mean, I think when I first got to university, I was interested in the topic, and I went and took out a book from the library called One Up on Wall Street by a man by the name of Peter Lynch, and he also wrote a book called Beating the Street. So those books. He was a very successful fund manager for Fidelity in the US, and so he sort of tells you about some of the companies that he's bought, and he makes it quite sort of accessible for someone who's not an investor to be able to understand what it is he's saying, and I think that sort of level of analysis, I think it was quite useful as a first start. And then there are many more on behavioral finance, etc., which you can get into. You can read Warren Buffett's annual letters, which are fantastic. You can even read Jeff Bezos' annual letters, which will teach you a lot about business. So I think there's a lot of material out there, but I think starting with some of the classic books are a good way to start.
Thanks for that question, Arthur. It was brilliant. I'm gonna slip one last one in there. It just came up, but after this we're cutting it. What does a typical day look like as a CFA for you?
So in my particular, so as a portfolio manager, so typically the day starts with you get to the office and read the news from the day before. Companies release announcements on the stock exchange news service, so the SENS, and you read any updates, any sets of results, and then we'll have a morning meeting at around 8:30, which could last anything from 5 minutes to an hour, depending on whether there's news flow or not. And then then you after that sort of get to work on researching the companies, building your models. You might have you might speak to company management from not on a daily basis, but periodically you will chat to company management, and then at times you'll meet with your team to discuss. Someone in the team will prepare a presentation on a particular company, and you then meet and discuss companies for whether you think it's a good idea to buy or sell that company on behalf of your clients. So it's quite varied. The work ranges from you sitting alone at your desk to chatting to people, CEOs of companies and people who operate in maybe even in the private sector, but who do a similar sort of business to companies that you might invest in, just to get a sense of whether or not the companies that you're invested in are doing well or poorly. And yeah, so I think it's quite varied. There isn't any one thing that you do, and I think that's quite interesting because it is quite a dynamic environment where things do change, and you need to update your views when it's appropriate.
Okay, good. There's a couple more questions in, but I don't want to keep Yusuf any longer. I'll try and answer some of the questions afterwards.
Okay.
Just to double check. Sorry, you were saying?
I was saying, no, you're more than welcome. I mean, if you have I think we might have a few minutes left, so you're more than happy to take any more, if you like.
Let's slip this one in. From Lubna, what other interview questions could they ask for someone applying for a job like yours?
Okay, so I was asked some interesting questions. So I was asked, how long. So there's this mine in South America which mines 1 million tons of rock per day, and how long would it take to mine Table Mountain? And obviously you couldn't come up with the answer, but you had to have a way of understanding how to get there. So there were some sort of totally left field questions, and then there were very standard questions about what are your strengths and weaknesses, what stocks do you like, and which stocks would you not invest in, like what would be your top long and what would be your top short. I think that that gives you hopefully some sense, but I think your background, that definitely examine your passion for investments and any personal investments that you might have made, and then there might be some sort of left field questions which could stump you, but they're trying to understand if you can think on your feet.
That's the most important thing, seeing if you can apply your mind and explain your thought process as you're answering the question so that they understand why you're thinking of certain things. We'll try and look at some of the questions afterwards as well, because they're coming through, but we can't take all of them. A reminder to everyone that the show is live on YouTube and it will be available on podcast tomorrow. If you are watching on YouTube or the podcast and you feel that the video has added value, don't forget to like and subscribe so that you get automatically notified when the next episode comes out. Our weekly discussion on Clubhouse about business and investing in South Africa is also on Mondays at 5 p.m. And the Android app is coming out soon, so look out for those who haven't been able to get onto Clubhouse because of the Android issue. Yusuf, thank you so much for your time. I appreciate it. We've had lots of questions, so clearly it's a very, very, very interesting topic that people want to know so much about. Thanks again.
Thanks, Wes. It was a pleasure. Thanks very much.
Thanks everyone for joining us for another episode of Tooways to Skin a Cat. Goodbye.